All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. I'm on about 5 minutes early here this morning, and just with everything going on, I want to jump on a little bit early here, take a look at some of the action here with you. There's going to be a lot more going on here today. It is just one of those things where we have a semi-historic type of morning shaping up, and easy to say something we don't see most days in the market. In fact, we can go many years without seeing this type of action, but we've seen this type of action before. And it's not something we can look at and go, well, it's super unusual. It is just a product of what is going on out there. And I'm not going to sit and repeat all the news and everything else, but when you take coronavirus concerns, you take bond concerns, then you couple it with the Saudi lambasting of Russia basically here this weekend. You get this cocktail for the market down 160 points on the S&P. And oil down $7 right now, but oil has rebounded almost $7 off of its lows. Pretty incredible rebound going on in oil right now. But we're not seeing oil stocks rebound with it, which I think is very interesting. But anyway, here I have a chart of S&P futures. And we had this monster rally into the close on Friday, and we saw the market go up here, 80 points into the close, just a monster rip higher. Does that mean, the selling's all done? No. And S&P futures last night open up down, and then you see this flat line here most of the night. The curbs were put in. Basically, trading was halted in order to stem the panic. And the S&P futures curbs are a little bit different than other curbs. They don't just stop them. They basically say, hey, no prices can trade below this level. And that was put in at the 5% level. And, we saw a couple times where, there were some trades that happened, but above the halt price, or the curb price, I should say. And then this morning, they reopened with the S&P, and down here initially, got a little bit of rebound, but then we saw the entire New York Stock Exchange halted as it was down 7%, and that trading curb kicked in to halt the market for 15 minutes. Now, the next curb kicks in at a 13% loss, so if we see, further loss here today, we will see another curb at 13% and then another curb at 20%. These are constantly being adjusted and changed over the years because, let's face it, most years the curbs don't come in. They don't matter. They're not something that that the markets have to deal with. But today is a little bit of a different case. So what happens? We get a market going into, a bunch of chaos. What happens? We get option spreads that are insane. Let's just go take a look at Alibaba, since this is the last thing we traded, just, for reference point here. But the 212.5 options here, they're going for $4 to $5. You think about how much this stock has gone down, yet how much the options really haven't, and the implied volatility that is built into this, and just the absolute overvalued nature of the options. And this is now an hour after the market is open, and the spreads still are not very good. This is something where spreads out there are extremely high. Very difficult to get into options early today. I was looking at selling some Bank of America puts, and I just couldn't do it as the spreads were insane. Now, the spreads have come on down now, into more normalized levels. But you look at the implied volatility, 82%, 102%. This is for Bank of America. Bank of America with implied volatility levels that we have not seen in many years here with it. And, for good reason, right? I'm not saying this is not reasonable or this isn't, something that shouldn't be. No, this should be. We should see these types of things. This is the way the market is built, and we are seeing them. And, it's not just in a few stocks. It's across the board here for the most part. Now, it's one of those where your charting service might be down. Stock charts, it's down here today. Other charting services are down. Your trade broker may be down. You may not be able to get into some trades as they are, ticking around. That's something that's very common on days like today. Where it's very difficult to get in or very difficult to get out of things in real-time trading. And you're always going to hear the stories of people who, on the day after, they were able to get in right away on the day where the chaos happened. And it's just not true. And we'll hear a lot of that. It'll be out there in the blogs and everything else. But, this type of market creates that, that difficulty. Now, this type of market also creates and induces a lot of panic. It induces panic for those that are holding things. It induces panic for those that want to get into things, right? Those that want to get into things, they start pulling up their chart and they say, should I enter right here? And I can't even pull up a chart. So I'll come into Thinkorswim's charts and pull them up. But, the question is very valid. What should I do? How should I manage? Oh, man, this stock just jumped big. Now it's dipping big. There's chaos in the market. What do I do? Do I just sit on my hands? And it drives further emotion with a lot of traders. These days aren't super common, and I don't have a silver bullet for how to handle, these types of trading days. From an option and a challenge standpoint, it's very easy because I can't even get into a position if I wanted to. It's just not very realistic. Maybe later today I could for the challenge. We'll see if any signals come in. But for the most part, I'm buying options that are incredibly overpriced. And so from a challenge perspective, it's pretty easy what to do. And great, I'll wait and I'll make my moves when the time is right. From an investor standpoint, though, it's different for everybody. For me, I'm in a little bit of a different position. For me, I have missed much of the rally over the last year from an investment standpoint. I've jumped into things here and there. You've heard me talk about them and, show them. But in all, I've been, a little lighter exposed and everything else. Now we get a big, massive pullback in the market, and I get to look at it as, okay, this is something that I can start to use to jump into things here and there. And I have over the last week and a half. I've dipped my toes in a few areas. Nothing too crazy. But on a day like today, the last thing I want to do is ask myself, well, should I just get in? Should I get big exposure? Should I do this? Should I getting into all the chaos and the panic? But the nice thing about markets like this, the thing that it does is it allows you to take advantage of illogical moves, to apply logic to what is absolutely illogical in many cases. Is it logical for Halliburton to trade under $10 a share today? It sure is. It's very logical. You think about what's going on with Saudi Arabia and Russia, with oil prices tanking. The oil, gas, drilling, and exploration sector in the U.S. or North America has just been crushed. Yeah, it's very rightful for Halliburton to trade under $10, and we could see it go under $5 if oil prices remain where they are today or this morning. EOG Resources, is it logical to see it down $15? Yeah, It is. It's very logical. Is it logical to see the banks down? Yeah, makes sense, right? It makes sense to see them down with what is going on. But now you look at what else is going on. Okay, there's IBM. Is the story changing today? No. Is AT&T story changing today? No. UPS? No. Facebook? No. Boeing? No. The majority, it's just caught up in the market panic. Visa, it's just caught up in the market. Micron caught up in the market. And we understand that happens in these environments. It doesn't mean that the pricing is right or anything else, or that you go jump in because it can't go lower, or a support level matters, or resistance level matters, or a MACD matters. No, the market's being driven by panic today. We've seen it driven by panic in both directions, up and down, for the last 2.5 weeks. That's not going to change. That isn't going to change today. It's not going to change tomorrow. And it's probably not going to change this week. Is it illogical? Sure, it's illogical in so many ways. But that just calling it illogical doesn't change the fact that it's happening and that we have to deal with it. But it's in these types of markets where we can start to navigate the illogical with a little logic, and that can create some opportunities here for us. Last week I talked about the stocks that rebounded and recovered, what their initial losses were, and that those stocks belong on a watch list. They belong high on a watch list for when things settle out and when things start to change a little bit, that those are going to be stocks that are buys. They weren't buys on Friday. They're not buys today just based on that logic there. But that logic will prevail when the market settles, when the market finds a bottom, when the market, starts to lose some of the volatility that it is currently experiencing. Well, today we have another nugget of logic that is coming in. What happened? Well, overnight we saw oil prices crash. They cratered. They absolutely crashed. Came all the way down to $27 a barrel. Now we're up at $34. So we've had one of the biggest rallies in oil history in the last 8-9 hours. But on an absolute basis, oil is down massively here. Mention what it would do to Halliburton and what it's going to do to North American drilling exploration. It's going to crush it. It's absolutely going to crush it. Could something happen and prop oil prices back up? Yeah, it could. Do a lot of countries have incentive to do something to prop oil prices back up? Does Iran have incentive to do some saber rattling to try to push oil prices back up? They sure do. But think about companies and what companies have been saying over the last few quarters in regards to oil prices. Walmart's a great example. Walmart, quarter after quarter after quarter, they talk about transportation costs and they're concerned about transportation costs. Going back to the beginning of 2017, they've been talking about this every single quarter, and it's been impacting their margins, and it's been hurting their business. What happened to Walmart overnight? Walmart made billions of dollars overnight. How? Well, their transport costs just got absolutely slashed. Okay. That's a story where we're talking about earnings, we're talking about margins, we're talking about something substantive for that company. Now, does it mean Walmart's immune to going down? No, it doesn't. It simply doesn't. But you think about other companies who are helped by that same logic. What about Amazon? Amazon very much helped. I mean, Amazon's trying to build their own fleet. They're not transporting oil. Walmart's not transporting oil. They're transporting other product that has a direct energy cost with it, and what's happening to that cost? Well, that cost is getting crushed here. That's a big positive for them. That's a very big positive. You think about companies like Hershey. Hershey, yeah, there's a pretty high transportation cost. What happens when oil prices go down? That helps Hershey in so many ways. Procter and Gamble, same thing. Oil prices drop big. It helps them in a big way. So we have seen today an oil story, and we know that that oil story can really help certain companies. And these companies, for the most part, are in the red here today, and rightfully so with all the panic. I'm not saying rush out and buy them right now. But for somebody who has been light in their portfolio, looking to add on a panic and things like that, like I am, I used this morning to go out and buy both Amazon and Walmart. Now, I didn't buy full positions. I wanted to sell some puts on them, but I just couldn't. The put prices were not good. The spreads were way too high. The put prices were great, but I couldn't get filled for what I wanted. So I did a partial position with some shares and jumped in. Now, does that mean that I'm immune to them going down? No, it doesn't. But I do know that their coming earnings are going to be improved by the overall oil factor. Now, these stocks have come down, specifically Amazon. Why? Out of the coronavirus fear. And some of that's been already discounted into it. But we now have a news story impacting these companies. And it's one that, I was willing to say, okay, where do I want to go pick something up here this morning? I'll go pick something up there where there's a logic here, to it. Now, I'm not picking them up with the idea that I'm going to turn around and sell them tomorrow or the next day. No, these are long-term positions, things that I want to be able to hold over the years. And yeah, they might go down. I may get a chance to cost average in. I picked up some Boeing early in the whole sell-off of the market, and yeah, I'm in a position where I'm going to need to cost average into it over the coming months or even the coming year to get that position to be a position that can make me some money. But I'm willing to do that because we finally have some panic. We finally have some distorted pricing going on. But I'm not willing to chase the rallies. I'm not willing to go after the really negative stories. I'm willing to go after some of the more positive stories where the stocks have come into areas where I'm comfortable with them from an earnings standpoint and how their earnings are going to be impacted. But let's not make any mistake. The sell-off in the market's not over. We can't look and go, bottom's in here today. Maybe if the market were down 20% right now, I might say something different. In fact, I watching things last night, and I said to my wife, it sure would be interesting to see the market down 20% today, to have a 1987 style crash. We haven't seen it. We haven't seen the panic elevate to that level. We continue to see the dip buyers get crushed. Right? We talked about this the last couple of weeks with the cookie. The dip buyers have gone from being able to get rewarded with cookies to now eating a cookie full of salt and just tastes nasty, and they're not able to, continue to buy the dips. When do we see them stop buying the dips overall? So far we haven't seen it. And we'll see how things shape up today. But the dip buyers are still out there. They have not been. They have been crushed to a great degree in many ways, but not to the point that we oftentimes see just before a market bottom with these bigger pullbacks. But bottom line here, if you're looking at getting into something, you're looking at jumping in somewhere, make sure there's a good story there. Make sure it's something you can hold for a long period of time. And outside of that, use your charts. You just simply use your charts. You want to go trade Caterpillar, it's not about the margins, it's not about the story, it's not about anything except the short-term chart if you're playing it short-term. That's it. To take a look at long-term support or resistance levels, in a market like this, what do they matter? They don't. They simply just do not. In the same way that 50 and 200-day moving averages didn't matter last week. We talked about them last week with the banks. It looks like stock charts is still down here, so I can't pull it up pretty easy. But, those moving averages, they just didn't matter. Why? The panic mattered more. We're still in that phase. The panic matters more than support and resistance. The panic matters more than long-term support levels. Could a stock ultimately hold at a long-term support level? Sure, but it's going to be more coincidental than a causation type of effect there. Okay, all right. The challenge. I'm not in anything. Even if there were a trigger this morning, chances of me being able to get in are almost zero. That said, the data source that we use to run the challenge algorithm is not 100% accurate this morning. So I don't trust anything that I'm seeing, as we do have some very weird signals on the board, but it is due to the data feed bringing in some missed data, which is not uncommon on a day like today at all, and so nothing that I'm looking to enter right here. We'll see by later on here in the day how things shape up, where they are. But just given what option prices are doing and where they sit, especially with a VIX that's up here in the VIX hit 62 today. My goodness, it hit 62 today. It's just a monster number. Here's a 3-year chart of the VIX. This is a 3-year high here for it. Let's see. I'm not all that versed in Thinkorswim, so let's see if we can find even longer term. I may not be able to do it here quickly. Let's go time frame. Yeah, time interval 20 years. There we go. 20 years. The highest VIX level in 20 years outside of the financial crisis. That means flash crash didn't come to these levels. European debt crisis didn't come to these levels. Chinese bond selling didn't come to these levels. Trade war never saw these levels. The U.S. election never saw these levels. We didn't see these levels even in the bear market of 2001 and 2002. The SARS virus, we didn't see these levels. Ebola, we didn't see these levels. These are levels that just simply have not been seen for a very, very long time, and one of those where are we going to see them again in the future? Well, yeah, most likely, sure, but they're not going to be a norm. They're going to be something that is, frankly, quite unusual, for the markets to experience. Thanks for hopping on. Have yourselves a fantastic day. I will talk to you this afternoon. Take care.